Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right. You know what? It would help is if we had the lights on. Hey, how are you guys? Well, today is Thursday. How is it already Thursday? It is Thursday, the 6th. Wow. Let's come to the charts and see what they did overnight. It sounds like we actually had a pretty big... Hey, where is my chart? Which was the right chart? I'm not even... Probably... This one. All right. Okay, well, so we just got absolutely pummeled yesterday in the 10-year. I think the chance of a December cut is down to like 60% now. But we are getting a lot of that clawed back. We'll see what they do here during the session if this trend continues. Challenger job cuts number came out early, I guess, and was pretty bad. So, and I'm going to bet that the next report is even worse. So, I tell you what, man, I see a lot of signs of recession. I feel like we're in a recession. In many respects, we are in a recession. Here's the S&P 500. They had a pretty good rally yesterday, did give some of it up afterwards, but they are trying to claw it back as we speak. Here is oil. There's still some talks about output cuts and increases and all that jazz. I can't even remember the details, but oil didn't move too much. Gold and silver, well, maybe a little bit of rise in gold there. Kappa, a little bit of a rise. And the Japanese yen bouncing there. That's a good sign. I like that. The dollar coming off of the 100 handle here. So that's a pretty big shift in the dollar. See where that takes us. And then Bitcoin. Apparently Bitcoin has performed worse than Treasuries this year. It's pretty bad. But it was like this was the all-time high, wasn't it? Bitcoin is so crazy. It's so crazy. We're like too zoomed in here, right? Even here, it doesn't look that bad. the pullback is just kind of okay, whatever. Let's see here. Andre says ES is playing really nicely around the 21-day EMA. It usually is a really good buy for short-term swing, and we bounce nicely off. So, let me come back here. Where was it? Well, my windows are screwed up and stuff. Well, I think Zero had a story. Zero Hedge had a story. From Zero Hedge, OpenAI CFO seeks U.S. government backing. Disappointed market doesn't have more AI, quote, exuberance. How do you know, 1, a bubble is about to burst, or 2, a corporate fraud of epic proportions is about to unwind? Look no further than Enron or Lehman Brothers, where Jeff Skilling and Dick Fuld, respectively, launched an all-out attack against the market in general, and shorts in particular, as a last-ditch desperation move to distract from the imminent demise of their insolvent companies. I like it when they're using all of the fancy language. I'm totally into the fancy language, but I got to enunciate as I speak here, huh? It may not be that dire yet, but in a recent podcast alongside Brad Gerstner and Satya Nadella, OpenAI's Sam Altman, when asked by Gerstner, who is an OpenAI investor, that the whole nonprofit thing is long dead and buried for those who haven't been paying attention, how a company with $13 billion in revenue can afford $1.4 trillion in commitments. Altman's reply, if you want to sell your shares, I'll find you a buyer. He talked about this yesterday. Very concerning. Actual translation, no answer. And while Sam didn't blame the market or shorts yet, he is starting to blame the longs for not having enough faith. He is not the only one. Earlier today, his number 2 doubled down when she blamed, get this, the market for being too pessimistic and not having enough exuberance. In an on-stage interview at Wall Street Journal's Tech Live conference in California on Wednesday, OpenAI CFO Sarah Friar suggested the market is overly focused on anxiety about a possible bubble in the artificial intelligence sector and should muster more exuberance about the technology's potential. Quote, I don't think there's enough exuberance about AI when I think about the actual practical implications and what it can do for individuals, Fryer said. We should keep running at it. The practical implications being putting 150 million people out of work, but let's ignore that. Of course, Fryer doesn't actually care about the lack of exuberance. What she and her boss are more concerned about is the epic circle jerk vendor financing deals that have served as the basis for much of the AI bubble rally and somehow always have OpenAI in their centers and are finally being scrutinized. As Bloomberg notes, there has been mounting scrutiny in recent months on soaring valuations for AI companies, as well as the accelerating spending spree from tech firms on data centers and chips to support artificial intelligence development. OpenAI alone has committed to spending more than $1.4 trillion on AI infrastructure, even though the company remains unprofitable and only has $13 billion in revenue, as noted above. To support its AI data center build-out, OpenAI made a series of increasingly more outlandish deals with firms like NVIDIA and Advanced Micro Devices that have been criticized as circular financing agreements. NVIDIA, for example, agreed to invest as much as $100 billion in OpenAI to help fund its data center expansions. OpenAI, in turn, committed to filling those sites with millions of NVIDIA chips. But in the interview, Fryer said, I kind of reject the premise completely. We're all just building out full infrastructure today that allows more compute to come into the world, Fryer said. I don't view it as circular at all. She continued, a huge body of work in the last year has been to diversify that supply chain. You know who also didn't view a glut of capacity as excessive? Global Crossing. They too were one of the world's most valuable companies for a while, and then they went bankrupt. As for whether OpenAI's deals are circular, let's ask Morgan Stanley, who released a research with a picture of all of the different investments. Anyways, of course, OpenAI knows very well just how farcical the whole circular financing circle jerk is, and is also very well aware of what the end game is. It's precisely what we said a month ago, we being Zero Hedge. The government will step in sooner or later, and OpenAI is now doing everything it can to make it, quote, sooner. Here's Zero Hedge tweeting on October 13th. The money is not the problem. AI is the new global arms race, and CapEx will eventually be funded by governments, US and China. If you want to know why gold, silver, Bitcoin is soaring, it's the debasement to fund the AI arms race. But you can't print energy. Besides the daily barrage of deals with chip makers, OpenAI revealed today that it is also eyeing a broad mix of financing sources to fund its infrastructure efforts, and especially one, you. Fryer said OpenAI is looking for an ecosystem of banks and private equity to support its ambitious plans, and hinted at a role for the US government to backstop the guarantee that allows the financing to happen, but did not elaborate on how this would work. Federal loan guarantees would really drop the cost of financing, she explained, enabling OpenAI and its investors to borrow more money at lower rates to meet the company's ambitious targets. I get it. Interest rates are too high, and so OpenAI thinks that they should get a special deal to have lower interest rates so that they can make the investments that put the rest of us out of jobs, while the rest of us are sitting here at home waiting for interest rates to come down because nobody's hiring. I am very skeptical the government will go for that. Let's continue reading. Because there is nothing like a company with 14 billion in revenue, 1 trillion in valuation, and 1.4 trillion in commitments, then loading up to the gills with government backstop debt. See, if only Enron and Lehman could have done the same, both would still be around. The proposal, unusual for a Silicon Valley tech giant, would theoretically reduce OpenAI's borrowing costs since the government would absorb losses if the company defaulted. Such guarantees would also dramatically expand OpenAI's potential lender pool, as many banks and financial institutions face strict limits on high-risk lending. As for clarification, an OpenAI spokesperson said Fryer was speaking in the context of the broader AI industry. There are currently no immediate plans about OpenAI pursuing a federal backstop, the spokesperson said currently. So, that's a very interesting note there at the end, that they're saying, oh, there's no concrete plans about this, but she is talking about this in terms of the OpenAI, in terms of the AI industry broadly. That basically the AI industry feels that in order for them to keep growing, we have to commit massively more amounts of money. And I find that deeply, deeply, deeply troubling. So, yeah, everything, every day, I feel like we are in a recession. And this is the sort of thing, like AI is at its towering heights. Like, they're doing really well. It's all of those companies with the AI that are pushing the S&P 500 higher. S&P 500 is just off of all-time highs. I mean, they've come back, but we were at all-time highs less than a month ago. It was like it was only a week ago, actually, right? Oh, where's this? Yes. 1, 2, 3, 4, 5, 6. 6 trading days ago, we were at all-time highs, right? And OpenAI is complaining that they don't have enough financing. That is wild. And yes, I am concerned that this is the sort of thing, like 1-2 punch. First, Sam not answering the question, and now OpenAI seeming like desperate to get investments and trying to proposition the government in the same way that we just had with Intel and all these other things. The issue is I really think that part of the investment in Intel was probably part of a deal with Israel, right? Like that deal between Israel and Palestine that Trump was able to negotiate with them, and probably part of the deal to get them to agree to it was to make investments in Intel, because Intel is a major employer in Israel and was kind of on the brink. How are you going to convince them to invest trillions of dollars into AI when the public is really starting to suffer? I think yesterday when we were talking about the Mamdani win, I think I was being kind of dumb, to be honest with you. Because I was just focused on, well, but you can't really do much. You know, what's really actually going to happen? I don't know if it matters. That's not what matters. What matters is that a basically full up socialist. I mean, I know that they're social democrats and they claim to just be in favor of good services and everything, but the reality is it's a front for communism. And the important thing is that he won, that a socialist is winning a major race like that right now. And what does that say about where certain demographics of the US are at? My generation, millennials, are voting for these shitheads. Technical term there. I don't swear often on stream. My generation is voting for these guys. They're not afraid of the communism. Some of them are there's a lot of kids that are outright openly support. I have them on my Facebook feed. It's crazy. I monitor them. It's a problem. And people are struggling now because we are essentially in a recession. And they are turning to anything that they can. And the problem is, most people in my generation forward have not really spent a lot of time trying to deeply understand the inner workings of our world, our government, and our economic systems. There's some of us that got really deep into the computers because we make a ton of money from it. But most of these kids, we're not kids anymore. We're in our 30s and 40s. Not understand the history. Do not understand why our financial system has been so successful. And so they're not afraid of it. They vote for it. And you say, well, AO says they will suffer for it. I've seen a lot of this. So there's been this debate online. I'm seeing like the biggest contention point when I'm seeing people debate about the whole mom dummy thing, because everybody on the conservative sides will say, oh, well, you know, New York will find out. New York will find out. But then other people will say, no, they won't. Have you spoken with these people? They're completely delusional. It doesn't matter how awful it goes, and every single time that they try it, it fails. They still believe in it. Yeah, people grossly underestimate urban cognitive dissonance. Most people don't know what real socialism is. The Soviets tried it and they left it. China is not a communist. Well, China was a communist country for a while, so it's certainly not anymore. Like, so here's one of the things. Yeah, you know, there's this whole cognitive dissonance thing. That wasn't real communism. And we always laugh at that, right? Well, how can you say that wasn't real communism? I'll tell you why. There's actually a really good explanation for this, why they approach the world and why they think like this. And I think it's a really important point to note. Okay. They think that the problem is that value is being stolen from you by capital. That you're not getting the full value of your labor because capital is stealing it from you. So you are thinking of this as capitalism as a system, communism as a system. Here's how the capitalism system tends to perform. Here's how the communism system tends to perform. They don't view communism as a system. Communism for them is a goal. That goal being a world where the value for their labor is not being stolen from them. So, if you go back and you look at a country like the USSR, and were the workers getting the full value of their labor? No. It was being stolen from them by the politicians, or so they think. And that's why they say it wasn't real communism, because if it was real communism, they would have achieved the goal. So, in their minds, it's really more like we have a goal and we have to think of a system to get us to that goal. That's the way that they're thinking about it, right? The problem is that their entire premise is bullshit. Their entire premise is bullshit. Your value is not being stolen from you. Okay? If you go and you do work, you go and because you can do that. You can go out into the woods. You can till the ground yourself. You can do all of these things, right? And if you do that, the value of that work on the open market will not be worth very much. You all by yourself, it will not be very much. Probably won't even be like minimum wage. Okay, but you can go and buy machinery from other people. You can go and you can get together with a group of people so that you can manage a larger plot of land. You can do all of these sorts of things, right? And if you're going to do these sorts of things, there's going to have to be some people that kind of take the lead to help organize it. There's going to be some people that are going to have to take like the risk of setting up that venture and getting it started. And then at that point, aren't those people like because their labor was so consequential in starting it and making it happen, isn't their labor actually worth more, right? By working together with people, the value of your labor increases. So now you have this huge thing that if you divided it up is more than what you would have made on your own. But if you just distribute it equally, nobody will ever participate in that, because some people have to put in more than others, right? So your value is not being stolen from you. By participating in the cooperative system, your value is being increased. The value of your labor is being increased to insane levels. Like, really, you think about it, that we have a lot of jobs now that with tech are equal to $100,000, $150,000 a year. That's a lot. It's a lot. But like the multiplier on that is insane. So the whole premise of communism is kind of flawed, right? Meanwhile, they don't understand the capitalist system either. Because really, why have we been successful? Because markets. You have to be able to say, what is something worth? Do we need to make more of this thing or more of this thing? And in a communist economy, because the government decides the value of everything, excuse me, because the government determines the value of everything, you don't have that data, essentially. So you go and you put something up and you say, well, we're going to price it at X. It's too expensive. Nobody can buy it. Nobody can afford it. So they all complain. The government brings the price down to the level that the people want it to be. And then what happens? Everything gets bought out. And then you're in constant shortages because you don't have the balancing mechanism of the market to be able to determine what the supply and demand is and find an appropriate price that will incentivize, you know, with something is too expensive for people to buy less of it, and if something is too cheap for, you know, people to make less of it, or if something's too expensive for people to make more of it. Right? There's all these balances out. You can't do that. In communism, you would say, well, the government just needs to find the right price. How are they going to find that? They don't have the data to do that. Because the data that you would need to do that comes from the transactions of people participating in an open market based on their own interests. Individuals. And you can't do that in communism because there's no private ownership of capital. So it just straight up doesn't work. So they're trying to get rid of a system that works to try and achieve a goal that is nonsense in the first place. You see, that's what's going on, right? But like, I look back because my whole thing has been, well, and that's kind of been the problem is we told people capitalism, it makes people work harder. That people didn't have an interest in, you know, they got lazy, which I think is not completely true, but is also like, it makes sense why they would say that, because I mean it is true in some respect, and at the time that was kind of what people needed to hear, because when you really get into it, it's just like, how does supply and demand work? How does the limit order book work? What are the kinds of behaviors that markets exhibit? These are all issues of complexity. People just can't understand it for the most part. Like, we can only understand it through really, really complicated science and computers. And then you have to tell people, oh, you just got to trust the answer that the computer come up with. Yeah, people aren't going to go for that, right? So, you know, that was kind of what they had to go for. But the result is you get these people that really don't understand what's going on. And now we're paying for it. I think the only solution is people have to understand these things at a deep level. I kind of remember when I was in grade school, them talking about the Federal Reserve and stuff. But shouldn't like U.S. monetary policy and financial markets should be like a high school class or something? I don't know. And the thing is that it's gotten so bad for some people that they will just turn to anywhere. And so you get the guy. He just has to present the right face to them. Then they won't even really understand what he's proposing. And I think that what we've seen so far kind of suggests to me that this battle will only get worse. That there's going to be more people, and we're going to be talking about it more and battling it more. Okay, so let me come back through because you guys said a ton of things while I was off on that. Yeah, people get disillusioned when they get screwed over in something like the subprime crisis, where a bunch of Wall Street cats almost bring down the country. Multiple people lose homes or they can't go to the doctor. Meanwhile, C-suite gets bonuses. Yeah, but like what's happening right now is that either A, you're losing your job, you're getting laid off after feeling like you did everything right. Like really what it comes down to. I saw somebody said this on TikTok. I'll probably never see them again, but I thought that they had a very, very big insight. They said that revolutions in the past do not come from the quote-unquote proletariat. That it's actually the people that tried really hard and did everything that they were supposed to do and were promised this prominent place in society, and then they got nothing. And that has basically what the cities have become. Millennials flocked to the cities. They got their university degrees. They took on insane amounts of debt to get those university degrees. And then they got their corporate jobs, and their corporate jobs could barely pay for the price of an apartment because the cost of living in these cities went up so high. And so you've got these massive people. And like, look, you can see it with me too. I think there is kind of like this underlying like psychological underpinning behind them that I share too, where it's like, hey, I've come in and I've done everything right. I don't have the same problems that a lot of these people have. Like cost of my house is really low relative to most other people because I knew what was coming. I knew what was going on, and I got into a house early. I started building equity early, right? So I don't have the cost of living problems. I live in a conservative state. So we don't have these problems. And yet I still feel this thing like, hey, I know all of this stuff. I'm really good. I'm way more productive than my colleagues. I've done this, that, and the other thing. But shouldn't I be doing better than I am? Why am I the one that has to go through a year of work turmoil? It's not fair. And what's going on in cities like New York is you've basically got like a whole generation of people that feel like this, except for that they literally have nothing. They went to school, they gave everything to their corporate, and what do they have to show for it? Nothing. And this guy was saying those are the people that tend to drive revolutions. And when you go and you look in the Mamdani race, wasn't the poor people that voted for Mamdani. The people that they're all claiming they're going to help, those aren't the ones that voted for him. It was the overeducated kids. But at the same time, the biggest problem, I really feel that when you look at, okay, so like here's the top level issue. Like here's the issue that's kind of pervasive through everything. That's what we just talked about, that people don't actually understand financial markets and all of that sort of stuff, right? Okay. Well, when you look at like the specific issues, right? The biggest specific issue is that the cost of housing in cities has just become obscene. And because, and this is 100% on Democrats, because it's Democrat people that are in control in these cities. And you can see the kind of policies that they tend to adopt, and they don't work. Okay. Bajar has a market question we should probably answer, huh? For the past month, I've been trying to find an edge in trading ZN, but so far I haven't made much progress. My setups keep changing. Sometimes I use mean reversion, other times continuation. I also switch between limit orders and market orders. I've been watching order execution speed and the order book depth as well, but I still haven't been able to build a solid setup. I'm using a fixed risk to reward ratio with a 2-tick stop loss and a 3-tick take profit, and I'm still experiencing frequent losing trades. Could you please give me some advice, or thank you? Okay. Jar, here's your problem. You're making it too complicated. Stop looking for setups. Okay? Whatever is like this pattern that you're going to see, or whatever the deal is, and then that's going to be the sign that you get in, right? That kind of trading on the kind of time frames and opportunities that are available to us as retail traders tends not to work very well. Because if there is a pattern, other people see it and they trade it. So it's like, don't you think that the robots are able to see some of these things? Right? Well, the robots, they can get away with it because they can trade on sub-second intervals, right? But for you have to sit and think about it for a few seconds and all of these sorts of things. It's just really, I'm not going to say that it's impossible, but it's really, really hard to find like a super specific setup, even an order flow setup that works like that. Okay. So you've got to take a different approach. And this is why I say that's where you're overcomplicating it. Because what would be a better approach? Just know what's going to happen. Just come in and make predictions. Say, I think that the Treasury market is going to move up because people are going to be buying on the really bad Challenger layoff news and concerns that the AI market is about to collapse. And what else do we got going? There's some Federal Reserve officials speaking today. That actually doesn't help because some of them might be hawkish, right? These are the things that I know is going on. Does that suggest to me that there's going to be more people buying than selling? Right? If I can figure out and I can accurately predict whether the 10-year Treasury is going to be up or down that day based on what I know about the market without even looking at a chart, that is like 90% of the battle. Once you figure that out, then all of the things that you're going to see on the order book and so forth become invaluable. If I think that they're going to be buying it today, and I see really hard selling, by the way, we're not seeing that. We're seeing buying. I actually did come in and think today is a buy, but we were already up to the kind of the levels that I was interested in, so I didn't try and take anything. In fact, I'm actually a little bit skeptical of this little push that we're getting here, 22.5. You could sell it, but it would be a small one. Okay. But that's how you do it. If I come in and I think that there's going to be buying, and then I'm seeing like really aggressive sells, like people selling 3,000 at a clip and pushing and really pushing it against it and everything, that's going to give me pause. That's going to be like, well, they're supposed to be buying, so why do I see this big guy really aggressively selling? That was not what I expected, right? And then I can look at these things like, how aggressive are their buy and sell orders? How do the limit orders react to that? In what areas do we see like the latent liquidity? Lots of transactions, places where there's low latent liquidity and we kind of get stuck. Those things all give us a roadmap as to whether or not what we predicted was going to happen is actually happening. And it can also help us identify like a more optimal entry spot. Place where I might have slightly better price than others. Right? That's all really complicated stuff, right? But the premise is not complicated. The premise is we're speculating. I'm looking at all of the information that I have and making a determination whether they're going to buy or sell. Okay. Now the key there is you got to think about the orders. You got to think, okay, X thing happens. How will that affect the orders that are submitted? Right? You have to do that. Think about it in the orders, because when we think about it in price, there's too much noise in price. Okay, think about the orders. Study the orders. Have things like cumulative delta up. Cumulative delta is the thing that you're actually trying to predict. Right? Yeah. So basically, does combining fundamentals with order flow align? Yes. Well, order flow aligns with anything that works, right? Like that's the whole thing. There is a lot of really interesting empirical research about order flow. So this is the first thing. I hate that we call order flow a strategy or a type of strategy when order flow is really data. And you can study that data, and could you find an edge in that data? Maybe. Okay. But when you go into the empirical research, what does the empirical research say about the order flow? You get things that like the retail traders don't talk about, right? So I'll give you the key insight in the order flow research. Okay. It's there's first an empirical stylized fact, and then what we think that means based on some of our modeling and research. Okay. So if I come in and I just randomly select an order and I say, is that order happening at the bid or the ask? Right. So is it a market buy or is it a market sell? And then I give it a sign, positive for if it's a buy and negative for if it's a sell. Okay. So I come in, I select a random order and it is a buy. And then I wait an hour, and in an hour, I pick another random order. There is a 0.5% chance higher that it will be a buy than it will be a sell. So like 50.5% chance that it will be a buy and 49.5 chance that it will be a sell. Okay. That sounds like that's tiny, but when you consider that like that's just with selecting a random order, that's actually a huge, like way bigger than statistically significant. Okay. So that's not just random. That's a very, very strong statistically significant result. Okay. I present it that way just because that's like the most clear standardized test that you can perform to see. Okay. But to put it in layman terms, if there is an imbalance, if there's more buying than selling in the orders right now, there's very likely to be more buying than selling in the orders an hour from now. And specifically an hour. Okay. So that's kind of interesting, isn't it? This is called autocorrelation of order flow sign, right? So the order flow, whether it's positive or negative, autocorrelated. So if it's positive now, it will continue to be positive. Autocorrelation of order flow signs. A very consistent statistical result that many, many researchers have found and is in peer-reviewed research. Okay, so why is that? The technical analysis people, they would say, well, other people see buying, and so they decide that they're going to buy too. That makes sense, right? And that's I think the way that most retail traders think about things, isn't it? It's kind of like, because they don't know what an institution is like and how an institution functions, they just kind of assume that everybody else functions the same way that they do. That they are just watching what the market is doing and deciding to buy or sell based on what the market is doing. And then if it crosses some magical line, then their opinion of it instantly changes, and now they don't want to buy it anymore. They want to sell it, right? It's the way that the retail traders think. Okay, but we could model this. Like, for instance, the same kinds of models that you would use to model nuclear fission would be a great way to model this, right? Because in nuclear fission, it's basically like there's one atom and it splits apart, right? And the neutron goes shooting off. And then if that neutron hits another atom, then that atom breaks apart. And when you get nuclear fission, it's because the atoms are packed close enough together and their movement is slow enough that they're getting hit by those neutrons, and it creates a chain reaction where it accelerates, right? So we go and we model that, and we don't get this autocorrelation of order flow signs. We don't get many of the empirical properties of order flow that we see. Doesn't work. That model does not match the real world data. Okay. So then these guys, they had this other idea. Because there's these guys at banks, and somebody wants to buy a large amount of something. And so then they would go in and, you split it up over time and execute it over time. And they would measure how much it would move the market, because they have to know that to figure out what price to quote to their customer, so that they can quote a price that's a little bit higher than what it would take you to execute it, so that you're making money, right? So they go in and they model this instead. There's a large meta order. Somebody's executing it slowly over time. When they model that, then you get all of these properties, and it matches the data almost perfectly. In particular, one of the things that it shows is this square root law, that if I'm executing like 1,000 contracts and it moves like $1, then if I execute 2,000 contracts, shouldn't it move $2? But it doesn't. It actually moves 1.414, blah, blah. It's the square root of 2, right? It follows the square root law, then, which is kind of an advantage for big players, right? But that's one of the key properties that like they can really only model by saying there's a large meta order, and then how do the market makers like react to that, right? Okay, so the takeaway for you is that intraday trends, are mostly caused by large meta orders being executed, right? Okay, so if we're going to have a trend based on whether or not there's a large meta order out there being executed by a large institution, right? Because you can come in and you can, like, you're on the shore at the beach and you're looking at the tiny little ripples in the water. You're going to miss the tsunami that's coming, right? Right? At that point, the only thing that matters is predicting the tsunami. All the little ripples, they don't matter. It's the exact same thing. If there's a large meta order out there, that's going to be the trend. That's going to move us. And that's the only thing that matters. And all these other tiny little things that you're seeing are irrelevant, right? So at that point, to make money doing this, you have to be able to predict that large meta order. That's why this kind of fundamental analysis for our time frame, right? If you want to do things purely technical, there are things like with momentum portfolios and things like that you can do. But for our time frame, where we're trading on time periods of 1 minute to 4 hours or whatever, you have to have that fundamental part of it. It's just unavoidable. You have to be able to predict these large meta orders coming through without being able to look at the data, because these guys, they're not necessarily looking at it and saying, well, I want to execute it because it costs this price. Like, can you imagine? Like, you really imagine going to a hedge fund or a mutual fund or any of these places, and then them saying, okay, well, we need to buy 50,000 treasuries today because they crossed over 112 even. Like, it just doesn't make much sense, does it? Like they don't work in that kind of manner. What they do is they say, well, this Fed president said that inflation is too high, that they don't want to cut interest rates, and so we have to hedge ourselves for the chance that interest rates go higher. Right? That's the way that they work, right? So you understand the institution, you can predict those big meta orders. And that's really the whole game. And it takes me a lot to get there to explain to you why that is, right? But the good news is that the consequence of it is actually kind of simple for you, right? Just know what's going to happen, is the way that I put it. I like to put it that way because it's kind of funny. People are like, well, yeah, of course, if I knew what was going to happen, then of course it would be trading. It'd be simple. But like, that really what it is you're trying to predict what's going to happen. A lot of technical traders will say, don't try and predict what's going to happen. They don't know what they're talking about, right? Okay. What we know about the market suggests that to really make money as a day trader, you have to be able to make predictions like that. And then all of this other stuff, like being really good at reading the DOM, those things are valuable, but you have to have that first piece. You have to be able to predict those large meta orders first. Then this other stuff, if it's actually backed by real, you're really actually seeing it. Because the thing is, you're coming into this data, it's really good at fooling you, right? It's really good at making you think that there's a pattern there that really doesn't exist. Okay, but if you'd really know your stuff, if you've really researched the data and you find things that are truly predictive or whatever, right? Those can all help you as long as you understand the meta order first, right? Previously, I traded using only the DOM. I watched order flow movement every second, observing the speed of aggressive buyers and sellers and the speed of bid-ask stacking. It was extremely exhausting. I couldn't take my eyes off the screen for even a moment. But up to now, I haven't gotten any results from it. Yeah. But you know what? That is still valuable, right? It will get easier as you go along. Because you were saying you've been doing it for a month. For me, I don't think I really understood what I was even looking at on the DOM for like the first 6 months. And it wasn't until I had been watching it for a year or two that I really had felt any kind of intuition about it, right? Once you've been doing it for a few years, you don't have to invest so much brain power. You can kind of just casually watch it and you'll kind of get an idea for like when it matters and when it doesn't. Like you can see right now, I'm not as interested in the market as I probably should be, just based on that we've had a decent move. Like we started at 21, so we've moved up like 6 ticks, right? But I just know based on the volatility numbers that I'm seeing here and everything, that's not an area that I want to be in. And while I am seeing some things like, oh, there was a big iceberg there at 23, it was a big one. But like we're at the highs, so you're going to see those things. So I haven't seen anything significant that tells me like, oh yeah, this is that situation where they're just going to bust through this and keep going. And rather, I expect if I got into a trade that it would probably be a really rough trade. So does that help? I hope that helps. So I'm just reading back. Oh, okay. So one other thing, Bajar. You know, if you look at the way that things go in options, for instance, right? They're kind of looking at like Gaussian motion, or I forget what they call it, and all of these sorts of things to say, you know, like how much is it going to move, right? Because it's random to them, right? There's a certain amount of volatility in the market. And when you give yourself set stops and targets, what you are essentially doing is limiting the performance of your strategy to what the volatility of the market actually is. So in all of my back testing, giving set stops and targets basically makes the results converge on break even. So it's good to have like a set stop and target for like testing to see, okay, is there like actually a predictive edge in this thing? If I give it, you know, only, you know, short leash, 4 ticks up, 4 ticks down, does this effectively predict what the next 4 ticks up or 4 ticks down are going to be, right? And in a situation like that, if I can get even like 51, 52%, I can go, oh, okay, maybe there actually is something to it, right? But are you as a retail trader going to be able to make money off of it like that? Like 51, 52%? Because that's basically like you take 100 trades and then 1 or 2 trades are all of your profits, right? How are you going to make money? Like the commissions are going to kill you, right? So you have to find a way to give yourself like these asymmetrical results. And that kind of means having like when you get in and out, not being based on how far it's moved, essentially. Okay. So I do not advocate for set stops and targets. You should have an emergency stop that, you know, if some big piece of news comes out, doesn't blow your account. But that emergency stop should be like something that like never gets triggered. Like you should always be getting out way, way before that. Right. And what am I doing? The way that I do it, I have my target based on the number of orders that are going to come through. I want to, you know, if I think it's going to be a 10,000 change in cumulative delta, I wait for cumulative delta to change 10,000 contracts and then I get out. And I'm also looking for these areas where we kind of slow down. That's like there's a big transaction there. And then after that big transaction, I'm always seeing like right now the offer was like only 400 contracts. And I'll see that it's just, I'm seeing 400 a lot. And if I tick up, it's only 400. And they go back and forth across that one price, but neither side is willing to really put up a whole lot. That's also a good place to take a profit, because that typically means that we're going to be stalled there for a while. So that's a good place. That's like, there's going to be a lot of liquidity there. That's a good place to get out to. Okay. And for a stop, what I'm looking at is, well, I've made a prediction. The orders are going to buy or the orders are going to sell. I can be early, but if I get in and I think it's a buy, and I'm seeing big sell orders, I'm immediately getting out because the order flow is not in line with my expectation, right? So you can give it a really short leash. And that's how I'm able to get these stats sometimes where like my winners are 1.5, 2 times my losers, and I still have a really high win rate. It's because I'm actually able to predict which way the market's going to go. And I give it a really, really short leash because if the flow is just not in line with my expectation, I immediately get out, right? And that's how I'm able to get like those asymmetrical results, right? Stops are unreliable with broker execution anyways. If you have a stop in place during big news, it's going to get, oh yeah. Like if you have a stop in place during big news and it gets triggered, you're going to take a lot of slippage for sure. Just, you know, is what was it? Oh, I haven't gone and looked to see if he posted it yet. But there's this guy, he builds trading PCs, and so he was doing a podcast sort of thing. So he interviewed me for the podcast. And he asked me about like what was your biggest loss? Which it wasn't too big, you know? It's like, I think that my biggest single loser has been like $500, and then on a day maybe $1,500, right? Which compared to most other influencers and stuff is like super, super small. I trade small, and I keep it, I think I'm always going to keep it small, to be honest with you. I don't see myself like swinging hundreds of thousands of dollars or millions. Like if I was making that much, I would be taking it out of the trading account and putting it into swing trades and stuff, right? Anyways, so I talked about this one time where I had taken a trade and I did not move like my stop and limit orders, didn't readjust them. And so overnight, those had been triggered. And the position basically went like a whole full handle and a half against me and then come back to break even. So then I came in and started watching it and decided to keep it and lost like $500 on it or something like that. It gave me the chance to get out. I didn't do anything with it. But I think the story I should have told was the time that I got 40 ticks of slippage on ES. That one was truly the worst, most wild, like good story. So I'm just sitting in a position. I'm just kind of taking a shot in me micros, MES, and all of a sudden there's this huge volatility spike, and there's one order that gets triggered that goes out at the top of that volatility spike, and it was my order. And it was 40 ticks of slippage. Like there was between my order and that, there was like 40 ticks, nothing happened. And I was the only one that got stopped out. How does that happen? Are you kidding me? It's crazy. And I don't think I've ever heard of anybody outside of news, of course, taken that big, because this was an endogenous move as far as I can tell. I don't think I've ever seen anybody get anywhere even close to that amount of slippage. Stops never make sense to me. Why use a stop order when you could just have a limit order? Oh yeah, because the limit order might not get triggered. So like if we're coming in here and we're trading and I'm expecting, you know, I'm in a position and I want to have my set stop. I often don't put it on there. And that's a bad progress. Sorry, that is a bad habit. Do as I say, not as I do. I don't put it up there because people see it and ask about it. So I don't like to have the stop up there. Okay. But if you're taking now in ZN, maybe I can get away with that, right? But I'm sitting here and I'm like, well, if it comes down 6 ticks, I want to get out. Okay. Well, what if there is a big move, right? You get a big move, and we could come all the way back to 16 in like an instant, and you'll catch slippage. But, you know, maybe you'll catch 19 instead of 16. Because if you have a stop limit order on there, you're just going to have a limit order sitting there that never gets triggered. So you do have to have it as like a stop, an emergency stop. And I totally get where you're coming from, Uzi, and part of that is just because we're trading treasuries, so crazy things like that don't happen very often, right? I can only think of a handful of times, and most of them were probably Trump tweets, where the treasuries moved so much in an unexpected manner that it would trigger what I think your emergency stop should be. So, I don't know. If you're trading in the E-minis, though, you definitely want to have one of those. Because you can lose so much on the E-minis if you just don't have the stop. So I didn't even keep track of the time. I don't remember hearing the bell. Yes, it has been pretty down. Let's see here. Where is it relative to yesterday? Okay, still well up off of yesterday, but near today's lows. I'm concerned about this. I think today is probably okay, but I'm concerned that within the next week that the S&P 500 begins to go lower. And in a situation where treasuries will go up. Because I'm becoming more and more concerned about there being a bubble. Like, I go on TikTok. There's so many people calling it a bubble. Maybe part of that is just like the engagement and everything, you know, like it's showing me what I want to see. But I have never seen a time where more people were saying that we were in a bubble about something. I mean, there was a lot of the everything bubble. If this was before COVID and especially after COVID. But with the AI bubble, it really truly is like everybody thinks that this is a bubble. And so when I see that, my first inclination is to be like, well, it can't be a bubble if everybody thinks it's a bubble. That doesn't make sense. Doesn't work like that. What is fueling the thing if everybody thinks it's a bubble, right? But when I start hearing comments like the stuff that I'm hearing out of the OpenAI people that should feel at the top of the world, and they're getting like seriously defensive like that, that's a huge red flag to me. Because and Zero Hedge, you know, maybe it's just Zero Hedge knows how to put it to trigger me. But like comparing it to things like Dick Fold from Lehman Brothers it really is like the apt description. The whole thing with Lehman Brothers was basically this place was on the brink, and these guys are talking about SpinCo. Can't believe that. The whole thing. SpinCo. That they were going to take all of the bad loans from the mortgages and spin them off into their own company called SpinCo so that it wouldn't bring down their main company. And it's like, who is going to buy that? How are you going to make that work? This is the most ridiculous idea I've ever heard in my life. But he's all acting like everything's fine and no, there's this great thing, you should all buy it and yada yada. No. And meanwhile, like attacking the shorts and being hyper defensive about it. Yeah, it was like it was like what's oh man, Baghdad Bob. It's like a Baghdad Bob moment. No, everything's fine. Meanwhile, there's soldiers in the background taking over the airports. Like, come on. Zero Hedge talking about bad about. Yeah. I read that at the beginning. It's their top story. Well, the reason it's their top story though is Zero Hedge has been really good. It's been really good at predicting these government investments, right? I forget, it was they predicted the rare earth minerals one, and then they predicted the Intel one. But you notice that they're seeing it different with AI. Like in AI, like one of the things is that we just don't have the power. Like we're going to have to build out power stations, probably nuclear energy, like crazy, to support the things that we want to do. That's without like artificial general intelligence, right? So why wouldn't the government be investing in that? And you want to have like a federal backstop. And I think that the issue with this is that you're asking the government to make an investment that would be like politically radioactive. You know? Can you imagine how like the social, because there was, when it was Intel, man, when it was Intel, and you go on Reddit and you read about it, and there was a lot of people mad about that the government was investing in Intel, especially because it's a conservative. So they're like, aren't they supposed to believe in free markets? And why is the government investing in things? And this isn't right, and yada 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 yada. Which I always thought was kind of funny. Like, okay, you're liberal. Why would you care? You think the government should do anything and everything. So why are you talking? Is it just because you're mad that you didn't think of it? That Joe Biden didn't do it? I don't. Because I guarantee you, like, what's going to happen is liberal presidents is going to make investments like that. And they're going to be all like, oh, it's a great thing. And they'll just completely backtrack, right? But can you imagine the discussion if they do it with OpenAI? Oh, yes. They're investing $1 trillion to like literally put everybody out of a job. And we are literally falling into a recession because of high interest rates. But you're going to give OpenAI a sweetheart deal? Really? That would be political suicide, I think. Because like if Trump did that, if Trump said, yeah, we'll backstop that, they invest in it, and then we have a recession, or heaven forbid, at that point, OpenAI still goes under, right? I think that a lot of his base would turn on him because they're the ones that'll get hurt, right? So yeah, I don't think it's actually going to happen. I don't think it's actually going to happen. And Zero Hedge didn't say anything like, well, you see, they're probably, the government will, yada, yada, yada. I'm not so sure about this one. And so, and just the fact that OpenAI is talking about having the government do it says to me they're in trouble. They've made commitments and stuff that they can't keep, and that if they don't find money, some miraculous amount of money, that it's going to fall apart. And the amount of money that they need is not an amount of money that they could ever actually get. And so it will inevitably fail to some degree. And it'd just be a question of how hard. So that has me really bearish. That has me really bearish. Yeah, people are hopping mad about their skyrocketing power bills got Government investing in AI and not new power infrastructure is political suicide. Hell, I'm mad about my monthly power bills, second only to health insurance premiums and rate of increase. Yep. That's in the areas where this is happening, it's bad. I should probably take this off. It looks like they're making another little push here. So maybe they will get to the 26.5 and I'm almost wrong. Oh, by the way, what was the number? 4.28? I'm really surprised that our number for volatility did not increase today because I kind of felt like we outperformed yesterday. What we outperformed, I would have thought that the market makers would have increased there. But no. Could it be getting lower because we're close to the rollover though? Like we're a month away from the rollover. I don't know. I suppose one thing that we could do is we could look at the next. You know, we could look at the March contract instead of the December options contract and see if there's a difference there. Oh, so Zero Hedge has a news story here. AI is no longer a buy everything trade. Goldman traders see zero-sum game emerge as Huang warns China will win the race. Oh, so they're saying you can't just invest in everything AI. That there's only going to be a small handful of winners and everybody else will go kaput. And that China, well, they're concerned that China will... I do think, by the way, you know, it happened at the beginning of this year. It's kind of funny that we've already forgotten about this, but like the release of DeepSeek, I think that was a really big moment because the whole thing has kind of been premised on making these foundational models. And if China can release a foundational model for free, how are you going to make money off of it? Like as OpenAI, for instance. That's a problem. And China is doing this intentionally to undermine Apple AI failed so hard it is now having to be fixed by Google Gemini to be useful. I found that one hilarious. I don't know what Apple is doing over there, to be honest with you, man. That's... You know, it was something with the last company that I was working for, or, you know, that I was doing contract work for. I was kind of interested in the Apple thing because they were saying we want to be regarded on the same tier as Apple in terms of like our interface design. And I kind of sitting there like, you're gonna have to pay your engineers a lot more if you want to compete on Apple's level. You know, like, but I wanted to understand, well, okay, if that's the goal, like, what is it? How did Apple do that? What was it about their culture? Like, what is their system that allowed them to do that, right? But now I don't work for them, so I don't give a shit. I need to stop swearing. Why am I swearing today? I'm sorry. I don't care. That one was not a technical term, but I just don't care now. Now it's like, whatever, Apple. I hate Apple anyways. And why are they like not doing anything the past, like, what? It's been a long time now too. Yeah. I know, I did see some of their stuff about like their headset. It's getting better. It's getting better. I think another generation or two you might have something that people like to use. Though I think Meta's probably onto something more. So I'm getting tired of holding my cell phone. I'm often out there in the living room where the boys play, reading my phone. But I hate it because the phone is not ergonomic. So I think glasses would be perfect. You just wear the glasses. You can sit there, especially if it could like follow your eye and you just think, whatever. Because I don't want to have to. The things that I've seen with the Apple thing, it's like you're doing this, and I think your arms would get tired of that after a while. He follows a good point. I don't think anyone will buy Meta products, whether it be glasses or anything. I genuinely believe most people would wait until a better brand did it. You're probably right on that one. You're probably right on that one. Like, did you notice that like the whole virtual reality, augmented reality space took a huge hit in interest when Facebook bought out Oculus? Yeah. Like nobody trusts Facebook anymore. And like the more that I watch Facebook, the more that it feels like Mark Zuckerberg is flopping around, just desperately trying to get anything to work. And the reason that nothing is working is because of him. Because nobody trusts him anymore. When they made that Facebook movie, it was kind of like, well, yeah, but there's two sides to the story and yada, 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 yada. But like as time has gone on, people just trust him less and less and less. But I think it's funny because like, people trusted Steve Jobs, don't you feel? I feel like that the public trusted Steve Jobs. They felt like that whatever he was going to come out with was going to be visionary. They wanted to be part of it and yada, yada, yada. Steve Jobs was a freaking nightmare, man. He was not nice. He was like maybe a psychopath or something. Like it was crazy some of the things that he did to people. And meanwhile, Mark Zuckerberg, I think he's just autistic, frankly. Like this whole thing, he wanted to raise his own food and slaughter it himself and go through that whole process of how to get the food and some of the other interests that he's had. That sounds like stuff I do, man. He's ADHD, autistic, something like that, right? And that's why people don't trust him. Because he doesn't know how to hold himself socially, rather than because he's like an actual psychopath. But the Meta sunglasses that they have does sound to me like a pretty significant development in the space. Not one that's going to become popular, but I think part of the reason why it's a significant development is because you're starting to see the form factor. Like when the first version of the Apple headset came along, there was people that were like, okay, I'm going to put it on and I'm going to walk around with it because that's supposedly something that you can do. And that didn't last very long because it was just so ridiculous, right? And then you get into the Facebook ones. Well, glasses are slightly more acceptable. Okay. But you know what? Like the wearing it out in public, like people still don't want to do it, or they feel like a creep because they know that like there's a camera and you're recording everything with it, right? And that's been one of the big use cases for it. But like people do see the use of it now, right? Now they're starting to say, oh, it would be nice if I didn't have to hold my phone in my hand like this all day up to my face. So I think eventually it will break out. And maybe you're right. Maybe it's just somebody else has to do it. You know? Not Facebook, and then they'll get it. What's this? Lots of rich people want to figure out how to feed poor dumb people. I never hear them mention holding farming lessons, teaching how to grow food in your yard, etc. Oh, okay. I think, again, like one of the issues that we have is that, like, the key changes that we need to have in order for society to become substantially more productive require an understanding of things that most people just aren't going to understand. You might be able to teach them the consequences of it and have enough of a reputation that they trust you and they really lean into it and believe in it. But it's kind of seems like there are counterintuitive things that people don't want to believe. So you're never going to see that change. So then if you are a rich person, what can you do? Right? Make as much money as you can so that you can hire as many employees as you can. Build libraries. Like I understand the conundrum there. Seed subsidies could help to make seen for plants government expenditure. I don't know. Like, most people don't have enough land to really plant enough that it would make any difference in their lives, though. So yeah, no matter what good you do, there will be someone that didn't help very mad at you. Especially since we've got this group of people now that literally want other people to do literally everything for them.
Block by.
That was a very strong uptick, wasn't it? They took out 5K there. Wait, well, how big was the actual block buy order that triggered? 4,000. Okay. 4,000, and then another 155 on top of that, and they just took it all out in one sweep. Wow. And it is because... Oh, and we got some news coming up here, don't we? What is it? Oh, no. That line is just... This is usually when we would end. Trump is supposed to make an announcement in an hour. I'm actually not sure why it's moving like that. It must just be the S&P 500 getting creamed. The S&P has definitely taken a bigger hit and has breached the overnight lows. Yeah, I saw this thing, like the group of people that were most likely to vote for Mamdani was single women under the age of 30. It was something like 80% of them voted for him, which is actually like a startling statistic. And this person was saying, well, they're just voting for the politician that's going to give them all the things that their husbands and boyfriends weren't able to give them. What is coming down to? It's like, Well, it also kind of sounds like a misogynist argument. So I'm not going to just automatically accept that. But it does make you think for a moment. Okay, maybe there are, just things that women are they need or whatever, and if they're not getting on one way, they're going to turn to the government for it. But it trades weirdly, not like last days. It ticks a hell of a lot in directions. It breaks, it stalls, it pushes back a bit. It's grinding slow on a lot of volume. Which one? The ES? Something I think is really odd. Man, I saw somebody on TikTok saying, like, I feel like we went into a different timeline with the Mamdani win, and they finally feel hopeful about the future, which is pretty crazy because everybody else is, like, in a panic, right? Like, the thing that I don't understand about the Mamdani win is the number of people that seem surprised by it. Like, we basically knew when he won the primary, and maybe even before that, when we saw what his competition was, that he was likely to win. So why is it all of a sudden that when it actually happened and he did win, now everybody feels like we need to have this come to Jesus moment? On the left, they're like, yes, this is it. We're going to win, and now we're finally going to get the socialism that we've wanted, yada, yada, yada. And all of the Republicans are like, no, this is like the end of everything. And we now, Republicans, we need to change things. So here's Mark Mitchell of Rasmussen Reports. Here's what I think is the only path forward for Republicans. Have a powwow and come up with a new contract for America. Lay out 20 concrete things that will reorganize the economic order and deliver on at least 5 of them before 2026. Plus, codify. Let's see here. All of Trump executive orders. If you can't beg, borrow, and steal the votes necessary to do this, then we will be I think he means to say otherwise we will be governed by democratic socialists. Right. What else is he saying? Another problem with conservatism: successful leftist influencers are shills. What successful leftist influencer? I don't think conservative influencers can succeed long-term as shills. Also, in the downtime, the conservative movement doesn't have internet people shilling for them, but of course they don't realize this and they fail to message. No, the conservative problem in terms of influencers is if you have a really conservative influencer, right, that is like at all reasonable, like probably Ben Shapiro has kind of become that. Like, it's kind of crazy to think, yeah, at the time Ben Shapiro was like considered far right or whatever, like really out there conservative, right? But he's really kind of become the establishment influencer. And then you will always have this other far right side that I think is kind of newer. Like, it used to be like nobody cared about it. It was like we knew that it was there, but you know, they're crazies and like nothing happened. But then when Trump came along, that group grew larger, and especially from some of these, you know, I would consider more what you would think would be moderate voices, but you know, they like the Rust Belt kind of types came in and ended up being really, really far right. And they hate Ben Shapiro because Ben Shapiro supports Israel. Right? So the influencer that you want will always get torn down by the other half of the party. You don't have that same problem on the left because the left's ideas have become so consolidated. I knew he was going to win the moment the ballot was finalized and the incumbent dropped out. Yeah, it was a three-way split. My understanding though is that he got more than 50% of the vote. Like the reality of it is that it was the candidates that were running against him more than anything. Like, you needed to have a Democrat that was a credible opposition, and the controversy plagued Kumo was not it. You know, Kumo was just a terrible alternative. If you had a viable Democrat alternative, then there's no way he would have won. I think. Because the issue is that you get in here, and what kind of makes this unique is you're getting somebody that's on the left that's being elected that people think like this is the end of the country sort of stuff. Right. It's a little different from what the left thinks of the country when Trump gets put in charge. I too, right? Like, okay, well, Trump has maybe some bad policies. I think we'll survive. I think that even if he wants to become a dictator, that we have the controls that will prevent that from happening. But with Mamdani, it is, if they do what they want to do, it will just destroy the country, because these are ideas that just destroy countries, right? Like, the people that are talking about it are very scared. They are very scared. So I think I have to say I was wrong. I came into this today and saw us between 20 and 22 and said, I don't know if there's really opportunity in this for me. I don't know if this is really going to go to the 26 half. And if I do, it'll be like a really tough trade. Well, if I had taken it, I probably would have gotten stuck at 23, and that kind of would have sucked. But here we are, 26 half. None of the metrics or things that I'm looking at here can really give me like an exit point at this point either. So that's a little startling. I suppose we can come and look at the volume profile now at this point. Oh, wow. Okay. Yeah. So we have cleared the movement since the PMIs yesterday. Oh, by the way, you know, I'm just remembering something else, because yesterday it was ADP was good, and then there was the PMIs, but there was also the Treasury refunding announcement, which I'd kind of forgotten about and didn't see on the news squawk, but that happened yesterday as well, and it was probably part of the downside that we saw along with ADP. So the point is, pretty big jump there in the Treasuries, recapturing from the other day. And what could be driving that? Wait, let's come back over here. Okay, pretty big rise in the Treasuries. We are canceling out the downside that we saw yesterday. What could be driving that? S&P 500 pushing the lows, that's what. And what's driving the S&P 500? Because there wasn't any economic news or like it headline that like would immediately cause them to go down. No, I think that it is the stories that we got overnight that like OpenAI is seeking government funding and all of these sorts of things. I'm seeing Bitcoin move down with it as well. And, well, actually pretty much everything. Gold, oil. Man, what is up? Besides the treasuries. UB, ZB, Japanese yen, ZNZF. That's all part of our treasury complex. 6E, 6B, 6X. Okay, so the dollar is down today. Silver and gold are actually up slightly. Okay. But I do think that is all kind of in line with the market is puking on AI. That is concerning. Oh, you know, let's read this. The Challenger jobs data. Oh, look at that. Layoffs for any October highest since 2003. Warehousing and technology sectors. Okay. So if it's warehousing, that is a big red flag too, right? Yeah, because AI is the last thing keeping us out of a full-on recession. I think you're right, Rox. If we're saying that a recession is 2 quarters of negative GDP growth, granted, there are issues with GDP, right? Because there's this whole issue with like people front running the tariffs, and because exports come out of the GDP calculation, you get this one period where GDP is really low, and then one period where GDP is really high. So we're not to, it would have to be the fourth quarter, because it was the third quarter was high, right? I think it was the third quarter, or was it the second quarter? No, I think it was the second quarter was low, the third quarter was high. So it would have to be, if we were going to have a recession, the fourth quarter and the first quarter of 2026, a recession. And what would be the one thing keeping us out of a recession, like keeping the GDP number for the fourth quarter up? It would be AI. Yes. Without AI, the rest of the economy is contracting because there is no funding. Nobody is hiring. People aren't starting new businesses. There's no money for it. So if AI collapses, yeah, it's a big deal. And so seeing the market come down in this manner, actually, let's check. CNBC, is that where they're putting it at? You know what? CNBC isn't as good at telling you where things are going as it used to be. It used to be that whatever was right here would be like, that's what it is, right? That's what people are talking about today. Job cuts in October hit the highest level for the month in 22 years, says Challengers. You know, so another factor we have to talk about that I haven't talked about was the Supreme Court yesterday. So you got to be careful about the Supreme Court analysis, because especially in a lot of these more controversial court cases, the logic that the court comes up with is not logic that was actually presented to them, right? There's this kind of take that, like, if the lawyers presenting to the Supreme Court make a really, really bad case, you know, that the Supreme Court only has the choice to rule against them, sort of a thing. But it doesn't work like that, actually. The Supreme Court justices argue amongst themselves and come up with different things. But the arguments before the Supreme Court on whether Trump has the power to enact the tariffs did not go well yesterday. Particularly, they asked the law that Trump is citing to do the tariffs, because this law allows him to keep it on and let it be permanent. That law doesn't specifically say that they can tariff. So, yeah, the justices, if they're going to rule in Trump's favor, would have to say, well, Trump said that he was doing it based off of this, but actually he does have the ability to tariff based off of this. So we're not going to cancel his tariff or something like that, right? Because again, if they rule against him and they have to refund the tariff, that would be a real disaster. That would be a real crazy disaster. Because you've had all this economic pain, but it's okay. We can kind of pay for some of it because we had all this revenue from tariffs. If we didn't get all this revenue from tariffs, then you just increase the deficit. You spent all this money. You had all of this economic damage from it. It's just like overall huge negative. So the market, I think, somewhat rallied because they're saying like we weren't going to have tariffs. But yeah, like the market was reacting to that. Poly market, I think, now says there's a 30% chance the Supreme Court will rule in Trump's favor. So that's not looking good. Okay, that's not looking good. But again, with these Supreme Court things, you got to be careful about approaching it that way. It's been like that with the most recent court cases, but it's not always like that. Where you can tell how they're going to rule based on what questions the judges ask and stuff. So could that be at play here too? Maybe. But I think that people are scared about the AI trade collapsing. Maybe I just feel that way because that's what I want to happen. You know? Feeling a little better today. Yesterday, I was fine during the stream, but then after the stream, I was just frozen. I was in like that ADHD space where it's like hard to get started on anything. I did do stuff. I still did some good work. Probably more work than most people at regular jobs do, but I wasn't like really locked in, you know, like I felt like I should be. Kind of got about halfway on upgrading my local infrastructure here to host GitHub and all of that so other people can look at it. Feeling better today, so I hope we can get more of that done. Oh, so we're watching the kids, so I can probably still get that done with them. Now they're going to 27. Now they're going past that. Starts to get dicey.
Block buy.
I wonder if Uzi took a trade during any of that. But like, honestly, well, how much is it? Actually, if you go to like going all the way back to 6 o'clock, my time, it's about a 45,000 contract change in cumulative delta. But when you look at the more recent time, it's only like 10,000. So like this does seem to be going really far relative to the volume. And it's also really steep. Let's see here. That's why Schmidt made no sense saying rate cut wasn't needed because equities were at all-time highs. Yes, but because, yeah. Rate cuts are actually needed because everything else other than AI is reeling. Oh, one of the weird things was with my contract job was that the manager, he decided to move over, basically like his old company, because he didn't like it. I think that his old company was kind of doing some woke things and he didn't really like that. So that's part of why he started looking elsewhere. But he went back because instead of working for the main company, he was kind of part of like a startup that they had bought instead. And he became their staff engineer of AI, which was kind of funny because like, well, he knew a lot about it by the time he was ready for it, but it was not like he had like prior experience in it or anything like that, right? And he was so nervous about taking it because he was seeing the same thing. He was like, yeah, I go into AI, it's a good gig right now, but like in 6 months, that whole thing could just completely collapse. And then what would they do with me? You know? the whole way that thing went down, I'm still kind of a little bit like at the time, I just kind of thought, well, these people, the higher ups, I don't really interact with them. I don't know what they're thinking, but they must just be stupid. You know, now I think that maybe they were in a hard place because probably their business is struggling with tariffs, and they probably had to pay a big finder fee. And so that maybe made me too expensive. But I still felt that the price range that the expertise they wanted relative to the price range was ridiculous. And was it yesterday or maybe it was on Monday? I had seen some stuff on LinkedIn, like they were still asking for candidates. It's been like 3 weeks and they still can't find anybody. So the problem is not that there's not anybody out there that can do it. There's tons of people out there that can do it. I think I'm one of the best, but I'm not the only person out there, right? But they don't want to pay enough. So why is that relevant? Well, like hardly anybody's hiring. And the few places that are hiring are like under huge strain, where it's kind of hard for them to hire somebody. That seems like a recession to me. Seems like a recession to me. All the layoffs that we're seeing, that seems like a recession to me. Actually, you know what? Like with the challengers' jobs cuts, like I am not surprised by the challengers' job cuts number. I'm a little surprised that the market didn't see that coming, but we were seeing all of the layoffs. And the thing that's been concerning to me about the layoffs is the timing of it. Companies don't like to lay you off in the fourth quarter. I mean, maybe there's some financial reasons that they would do it then, but like just from an interpersonal perspective, right? Last thing you want to do is let somebody go just before the holidays, right? So, if you're getting that much in September and October, what do you think it's going to be like after Christmas, when you don't have the holidays anymore as an excuse to hold back? Yeah. There you go, Rox. It's usually December to January.
Block
like
sell.
after Christmas. Yeah. So I'm concerned that in January you really get a increase in job cuts, and that then for sure sends us into the death spiral that creates a recession. Market's got to cry. We shouldn't say that, because that kind of puts us into the theory that like there is an intrinsic value that the market is worth, and if we get too far away from that value, the market has to come back, and yada. That's not really actually the way that the market works. And so we could be overvalued, and we could stay overvalued forever. That can happen. Honestly, if OpenAI wasn't so like, showing, what is, I feel like there's a word for this, but I'm not quite sure what it is. It's like OpenAI is showing their insecurity, right? If OpenAI wasn't like openly displaying their insecurity on the stage, maybe we'd be just fine right now. Like, can also be a slow beat, not a crash. Man, I sound so depressing today. It's hard, Rocks, isn't it? It's like one of the issues that you got is that the way that you feel personally could be due to a bunch of different things. right? And when you're feeling down, you're going to have this tendency to see everything negative. So you might just be down because of the election on Tuesday, or maybe it's just you're in that cycle, like your body will go through different cycles. It's all based on, what nutrients you have in your body and things like that. You'd be down, and then you think you're bearish, right? And so this whole time, really the past year, I've been feeling bearish. I've been feeling like this seems like a sort of a thing that ends in a recession. But then I always come and I say, okay, but what actually is the data? Well, no, I don't think that I'm bearish because the data looks bad. I'm bearish because I was laid off. And it's hard to find a job right now, but I'm actually in the minority in that case, right? But now what I'm seeing is, okay, you had this group of people, they're unemployed for a long time, and now that group of people is growing. And it doesn't take very much for it to grow. And if nobody's hiring more, it just falls apart. But I'm still not convinced that that's what's happening. No. Because really today it is about OpenAI. And like how many jobs are actually due to that? So we can't say like even if there could be a situation. I guess what I'm trying to say is I'm concerned about a recession right now. I see some things that seem very recessionary to me. But there is a case where we have a stock market crash, but not a recession. That could happen too. Heck, a stock market crash might be a positive thing for everything, right? The whole AI thing crashes, and then all of the companies go, oh yeah, we need to stop investing so much money into AI and compute, and we need to hire people. And then the interest rates are low enough that without AI in the way to compete, then they hire people, and then we're fine. That could happen. That could happen. I think that's a reasonable. It's not even like just like a, well, it could happen. It's probably one of the more reasonable outcomes, right? So you do have to think like it's so interesting to think about this from a investing perspective. Like think of it this way, okay? If I am gonna go and buy a stock, and that stock, I expect that stock to return 3% a year to me. That's not very good in these environment. I might as well go and buy a treasury because I can get 4% right now, right? Or what can I get? 10-year, yeah, I can get 4.1% actually, right? For 10 years. Why would I invest in the stock? Doesn't make sense, right? Okay. So the interest rate that we have kind of changes what people are willing to invest in. The higher the interest rate is, the more of an upside the stock needs to have for them to want to invest in it, essentially, right? But what about AI? Because the return on investment for AI to these people is a bazillion, right? Like there's just like infinite upside to it to them. There's absolutely nothing, no interest rate that would be too high to convince them to put their money into treasuries or something else rather than AI. It sucks all the air out of the room. And that has definitely happened. So, in order for any of us to be able to breathe again, probably the AI has to crash. It's kind of a weird thing. Like here's the thing. What if AI is just one innovation away from actually having artificial general intelligence? And if the economic conditions were right, it would play out in a way that made everybody more productive. We'd all still have jobs. We'd just be way more productive at our job, and we would be making so much from our job that, you know, like everybody's a millionaire now. And like in terms of like everybody quality of life is like a millionaire, right? But because of the situation, where the interest rates are, the fact that it's sucking all of the air out of the room and nobody can, you know, find a job, it goes in a completely different direction. The AI market crashes, and then people don't want to put money into it. They say, oh, this was all hype, it didn't work out that way, yada, yada, yada. And they never develop that innovation. AI, artificial general intelligence, doesn't happen, or we don't take advantage of it simply because the market didn't support it, because people couldn't get jobs when it sucked all the air out of the room. Is that a possible scenario? Because it sure seems to me like that you could have the most amazing invention in the world, but if it doesn't improve the quality of life for the majority of people, it simply won't stay. It won't be able to sustain itself. Because who's going to pay for it? Essentially, right? At which point, the blame then goes primarily to OpenAI and all of these accelerationists that thought that artificial general intelligence was going to lead to like this communist utopia. Just a scenario. I'm not saying that's what's going to happen. But let's see here. For sure, man, I heard you a couple of times on Livestream having a rough day because of job situation. When it's like that, I don't trade it either because of color. Yeah. Like one of the frustrating things to me is that before we one of the things that we were kind of messing around with was working with multiple contracts, and like how many contracts should I actually take and sorting that out. And I think that there's a lot of optimization to it, but I think that I've got the basics of it out where I can use 2 contracts, possibly 3 contracts if it's a situation where I expect it to be relatively narrow, like yesterday. And I know how to sort that out. And so I could see getting a 5K account and trading 3 contracts and doing pretty well with that. And I would like to size up because I've always kept it as small as possible. But if I sized up, it would pay for commissions and things like that, because that really is a drain on the account. So like I'm making basically my trading overall. I will still have down periods for sure, but overall the trading is pretty good, and it needs to scale up, right? And then that was like right when I got laid off. So if I hadn't have gotten laid off, I probably would have saved all of that and opened a bigger account, and that's what we'd be doing right now. But on the other hand, I feel like I've done pretty good. When I go and I read the stuff that people are saying on Reddit and how they feel about it and everything, and I'm just, you know, like, no, that's not me. Because so many people feel discarded and worthless and all of these things. I don't have that kind of self-esteem issue. Is that a problem? I don't know. But I still think I'm pretty fucking amazing. I did that 6-month contract job, and I killed it, man. I did such a fucking good job. They loved me. Everything that they said was so positive. This, especially the manager, the one that I was working with the most. I got so much done. It was like some of the most productive I've ever felt. I loved it. I felt good. And I know that where I'm at is really not some huge failing on my part. It was just kind of a little bit of bad luck in market conditions, you know? And so I have been able to stay positive, keep moving. I know that eventually we'll come out of it. It might take a long time, because this is kind of like I think to some extent you can think of what's happening right now like a depression, because really what happened in the depression was we had a market collapse and we had a recession, and then the Federal Reserve, who was new and didn't know what they were doing, said, well, because of tariffs, we shouldn't cut interest rates because we need to keep interest rates relatively high. So they didn't print the money, and then there was no way to come out of the recession. And so people just had to go years with there was no work available. So what we're experiencing now is a similar thing. Those people that are out of jobs for multiple years, we're experiencing a depression. I don't think that historically we'll call it a depression, but the amount of what is the word? The amount of tribulation that some of us are experiencing because of this is on par with the depression. It's probably not as widespread as it was during the depression, but some of us really are in that role. And it has to do with the amount of time that it's like that. I have hope that this is going to go away within the next year. But I know with the way that things are going and everything, like it could, because what if this is just a one-day thing? Like here we're talking about all this because the S&P is going down and we think it's because of AI. But this isn't the first time that we've had a big drawdown in the stock market because of concerns about AI, right? Like we talked earlier about with DeepSeek, right? Tomorrow they could be like, it's fine, and it keeps going, and it takes another year or two for them to figure it out and do something. That can happen. I'll be very upset if that happens. Do you see? So like my mood is actually better today, I think, at least here during the stream, because I think that the market is falling because of AI, right? Because where I was the worst was when Powell was saying, we don't think that a December rate cut is not a given, right? That's why I was like, well, I don't know how things are going to get better. I mean, of course, there's always, I think I'm great. And so eventually you're going to find a job that fits you well. And some of it is maybe just luck of the draw, right? But higher interest rates, not helping. Stock market collapse. That means lower interest rates. Good. Because that's what we need. That's what Seth needs, at least. What you believe tends to become real. Defeat isn't as dangerous. You know what? I kind of struggle with that. I definitely believe that your actions, your beliefs will turn into actions. But I don't think that it's a one-to-one. I think that you can step in and you can say, what do I need to do to be successful? What does the data say that I should do? What does the situation say that I should do? And if you have the right strategic, tactical mind and everything, and you know what to do, you can do well with those things, doing them, even though you don't really believe in them. Right? Versus you absolutely, with your whole soul, believe something that is total bullshit, and it, despite how hard you try, it never happens. Right? And people push this, what do they call it? Manifesting. This whole manifesting gospel. Where it's like you gotta, believing in something and thinking about it in a certain way will make it I think that's total bullshit. Technical term in that case. I don't know if I should use that term. I've sworn too many times today. But I think it's nonsense. Manifesting stuff. It's a really great way to sell a course. Right? Oh, all you got to do is believe harder. And then if it doesn't work well, it's because you don't actually believe. We need to go down into your childhood and understand why you don't believe this. So I think it's nonsense. I think you're not always going to feel great. And you have to be able to, some degree, still function and push when you don't feel great. That doesn't mean, I think of it as like the pioneers, man. Because can you imagine like what my ancestors did? Walking all the way across the plains, through the Rocky Mountains, to freaking wasteland. Because the Salt Lake City really is wasteland. Right? And they were walking like, what, 20 miles a day or something? That was rough. Do you think that they felt good about it every day? No. Walking. Maybe some days they didn't walk as far because they didn't feel as good. They didn't stop. I think you have to be able to do that. Otherwise, you're kind of setting yourself up for this thing where I have to feel my best to be successful. And if I can't feel my best, then I'm never going to succeed. And then you're just going to get stuck in that rut. Right? And that's particularly significant for trading because when you lose, it hurts your mentality and it kind of hurts your ability to think. Right? And so you've got to know your stuff well enough. Have it all ingrained into you so that you can still be successful when your mentality is shot. So you can pull yourself out of it. Yeah? Right? That believing you can do something doesn't guarantee it'll happen, but the corollary doesn't hold. Believing you can't do anything pretty much guarantees you won't. I don't know, man. The thing I think is funny is that a lot of the things that where people had massive success, like there are absolutely some people like Kanye West where it's like they manifested it. It was their unrelenting belief in themselves that pushed them to success. But I don't actually think that that's the majority of people. I think the majority of people are kind of just as surprised as everybody else that they were successful. I think that there's a lot of complexity to it. And that to predict or manifest that it will be you is beyond our mental capacity. So all you can do is just do your best and do what you want to do and be excellent. And if it happens, it happens. If it doesn't. Well, I agree. Yeah, it's kind of a weird thing. They're kind of pushing that high again. I feel like if the treasuries go much higher, that this is going to turn into a really wild ride. Like, I have to keep pulling up this volume profile over here. CN. Okay, well, the high from yesterday was 113.02. So up in over here in market high. I don't think that we would get there today, but this is definitely a big shift in the treasuries, isn't it? one of the things that I think we got to be cautious about here is like yesterday, I took the mean reversion trade. I think I kind of got lucky on that trade yesterday because, you know, that was the best place to trade the mean reversion trade. I got it perfectly, and after that, they didn't do much, and they went back to those lows, right? And that's the way that it should go. Is like, okay, I saw the news. I think that this is something that could really push us, right? Today is a little bit more amorphous, right? It's not like, oh, there's a piece of news that's definitely going to push us this way. This is totally the way that it goes. I've seen this before, etc. You know, this piece of news, this is one that'll move all day. No, it kind of sneaks up on you, and why is it happening is a little bit uncertain, and yada yada yada, right? But those are often the most powerful ones, right? Like the craziest trend days tend to happen when nobody is expecting it. And it's part of nobody expecting it that makes it happen, you know? So I think it would be easy to say, well, we had this economic yesterday and we had this economic data today. And you might sort out a way in your mind where overall net that's negative, or overall net that's positive for the economy, which either way. And so you might say, okay, overall net that's positive for the economy, so we will come back down. But the fact that it's happening in this way, I think, should give you pause. That like something else is happening more important. I'll give you another example. There was another story that Zero Hedge was promoting before they switched over to, that was kind of anti-AI, that basically said that UBS was shorting AI and NVIDIA and all of these other things because they were so exposed to it by this point. Like they have so many investments in AI that if they don't go short, they would be completely wiped out. And what do you think? How many other institutions out there are maybe starting to think, oh yeah, actually maybe that's a good idea, right? And then if the whole thing is based on sentiment, the whole thing is based on like it was already up and then it's down, that kind of becomes a self-reinforcing thing, doesn't it? Happening right now. We don't know that for sure, but it sure seems like it. We'll have a better idea today at the end of the day, because one of the things that happens is all of the desks, you know, like if we were on the Goldman trading desk, right? You're answering calls. They're saying, oh, I would like to sell this. And part of what you do there is you don't just say, okay, here's the number or whatever. You're also talking to them like, okay, why? Understanding what's going on. They kind of come to you because you understand everything that's going on in the market, right? And so you're collecting information in that way. And then those desks will often report what they saw at the end of the day. And that's where you get like some of Zero Hedge's synopsises, and CNBC will catch wind some of that stuff, right? So by the end of the day, we'll see, okay, were they like outright selling, and where was the selling concentrated in? And was it really actually an AI? And because of these concerns about AI, we'll find out. Because if it is, and then the next thing would be, it couldn't just be one day, right? If it turns into a multi-day thing, then it turns into this could really fall apart. This could really fall apart quickly. And I'll be happy. It's already bad for me, right? So everything falling apart just makes it better. I don't want to be rooting for the economy to fall apart, but lower interest rates would help me, okay? Lower interest. Maybe there is a crash and they bring interest rates all the way back to zero. And then I go, oh, I don't have to go fundraising. I can just go and take a loan from the bank. use it to hire 1 or 2 developers. No, I think we would need, we're going to start the business. I think that solo founder probably wouldn't work. Probably I would need somebody to do the business side, the business marketing side. Like, I would maybe still be the face of it, but they would like tell me what to think. Something like that. And they would also have the connections to the fundraising access. So it'd have to be another founder, maybe 2 founders. Maybe you need another person with the technical expertise. And then we could hire somebody. And we could just take a bank loan and do it. And we wouldn't have to worry about angel investing to get it. That would be kind of cool. No, I don't know if we would be able to do it with the bank loan, but maybe if part of it was a bank loan, it would help, right? So I think we could make an awesome trading platform. One of the things I've been thinking about a lot lately, for some, this is like completely separate from everything else, but just kind of transitions into that really well. This may be the last thing that we can talk about. And we were reading about it yesterday, was these guys from some of the startup subreddits saying that, like, actually it's gotten harder. Like, the advent of AI has made it harder to do a startup. Like, there's all of these people saying, I'm going to start my SaaS service. I've actually seen some come along and say, like, oh, it already has 100 users or something like that. Yeah. But what's your moat? What's stopping me from saying, okay, here's their idea. Here's how they were making money from it. I can copy it. Probably can do a better technical if I'm programming it versus they vibe coded it. Do a better job and just steal all your business. So what's going to stop anybody from doing that? And it really has kind of come into, like, your only moat is distribution. That basically, like, the reason your business will be successful compared to anybody else trying to copy that business is because you have the marketing, you have the connections to get to that audience and get them to buy. Versus the moat used to be, like, nobody else can build that, right? But I think when it comes to a trading platform, yeah, you can build a trading platform, but my trading platform will be better, and you will not be able to copy it. So, will I have a little bit of a moat? Maybe that's a better moat than a lot of SaaS services, at least. But the downside of that is that there's also greater upfront investment required for it. So, Well, let's come in before we get going. We got a good 5 minutes left. See here. Okay, so CNBC's headline now is stocks drop as AI stocks resume their decline and the NASDAQ falls 1.5%. Oh, you know, I didn't even think to come and look at the percent numbers here. Wow, soybeans is down 2% too, by the way, which is not good. Yeah, NQ down 1.47%. ES down 0.96. And that's a regularly sized bad down move. You know, it's not until you get to like ES 2% that it's like, wow, that's crazy. Could accelerate. U.S. stocks retreated on Thursday as names in the artificial intelligence trade came under pressure yet again amid worries around eye-watering valuations. The S&P 500 traded down by 0.9%, while the NASDAQ Composite shed 1.5%. The Dow Jones Industrial Average slipped 364 points, or 0.8%. Thursday's pullback was exacerbated by concerns about the state of the labor market as October saw a significant number of layoff announcements. Job cuts for the month totaled 153,000, marking an increase of 183% from September and 175% from the year ago period, according to Challenger, Gray, and Christmas. That's the highest level recorded for in October in 22 years. Not only that, but 2025 is the worst year for layoffs since 2009. During the session, AI stocks remained in focus for those on Wall Street. Qualcomm shed 4% even after the chipmaker posted better than expected quarterly results. Wow, Qualcomm down 4%. AMD, a standout name in the prior day, declined 7%, while Palantir and Oracle dipped 3 and 4%, respectively. Dude. Okay, I just didn't even think about this. If this is really happening, like if the AI market is really going to totally collapse here, and we shouldn't get too hasty. Like, again, this could just be like a 1 or 2 day thing, right? But if it does happen, how big of a genius is Michael Burry going to be seen as? I think that a lot of it is he's just taking big bets, right? But he will really, truly be the legend then at that point. Shares of AI darling Nvidia and fellow magnificent name Meta Platforms slid as well. However, Marvell Technology was a winner with shares moving 1% higher following a report that SoftBank had thought about a potential takeover of the chipmaker. Equities linked to the AI space began rebounding on Wednesday from valuation concerns that swirled earlier this week as serving as a potential boom. Okay, now they're saying AMD closed more than... So this is actually like they updated the story with the most recent data. And earlier it was at AMD was up 2%. Okay, so we can stop reading right there. Mike almost certain. Do you think that anybody calls him Mike? Let's ask ChatGPT. Do you think or have any evidence that people call Michael Burry Mike by just Mike? Does Michael Burry have a nickname? I couldn't find credible evidence that Michael Burry is commonly referred to as Mike. Here's what I found. His full name is Michael James Burry. Major biographical sources and financial press coverage consistently use Michael or Dr. Michael and not Mike. He apparently uses the nickname Cassandra for his social media persona. It's possible that some... I'm reading this is so dumb. It's possible some acquaintances or less formal contacts might shorten Michael to Mike, but I found no reliable indication that Mike Burry is a widely used nickname for him in public discourse. We could call him Mikey, Dr. Mikey. I gotta type on a phone and I don't want to use the long form name. This is so mean too. Dude, you get this thing where like you're browsing Reddit and that's the day where you decide to leave comments because you're stupid and you can't help yourself but post comments on Reddit. And I do it with the swipe, you know, which is faster, but man, it kills the thumb. And then the next day I've got like the carpal, like I can feel it, like the inflammation in my thumb. Phones are bad for us, I've decided. I've decided that phones are bad for us and that if you want to be plugged in, you should be sitting at a desk like this. When did the light in the background turn off? Well, that's what the room looks like without the lighting. We can just call him Dr. Mike. Except for that isn't Dr. Mike the name of that bodybuilder that's like really obviously used steroids and acknowledges that he used steroids? Yeah. I like calling Jerome J-Pow. That one's great. I don't know if Mike is the right nickname for Mr. Burry. Bastard. Reportedly used jokingly by Elon Musk in reference to Barry from one article. When I hear bastard, I hear crew gang vocals, Barry wrote, after Musk labeled him that in jest for shorting Tesla. Yes, so that's what we should just call him, that bastard. No, I don't think YouTube would like that. Or recently, Dr. Barry changed his nickname from Cassandra to Thought Crime. I think we can come up with a better nickname for him than that. Yeah. Because the thing is that if it happens, I'm gonna be talking about him a lot more. Well, you think of what nicknames we can use for him. We'll see what happens. I'm sure that at some point the S&P will claw back some of these losses, but we'll see what they do going into the close and what they do on Friday, because especially when you get a down week and then they sell into Friday, that's usually not a good sign. So I'll see you guys tomorrow. In the meantime, stay excellent, team.